Dubai Property Law 2026 is not just another headline for buyers to scroll past. It is one of the clearest signs that Dubai real estate is entering a more professional and less forgiving phase. A lot of people hear the words new rules and assume that means the market is slowing down or becoming difficult. I think the better interpretation is different. The market is still active, but it is becoming much harder to survive with weak advice, poor execution, and lazy due diligence. If you want Astra Terra Properties to help you compare real projects, brokers, and exit logic before you commit capital, message us on WhatsApp early. In this phase of the market, choosing the right advisor can matter almost as much as choosing the right unit. Welcome to Astra Terra Properties. In this video, I am breaking down Dubai Property Law 2026, the broker shakeup happening underneath the headlines, what the latest demand data still says about market strength, and what smart buyers should actually do now. Let's start with the main point. Fresh reporting around Dubai's new emirate-wide property law and the tightening pressure on brokerages tells us the market is becoming more regulated and more professional. That matters because regulation does not just affect paperwork. It changes who survives, who buyers trust, and how much bad advice the market can tolerate. Now layer that into the actual demand data. Dubai Land Department reported AED 252 billion in Q1 2026 transactions across 60,303 deals, with 29,312 new investors and more than AED 148 billion in foreign investment. Those are not distress market numbers. They show real depth, real liquidity, and continued international appetite. At the same time, Khaleej Times reported that Dubai saw the handover of 10,000 apartments for a second straight month, with more supply still expected before year-end. That is a very important signal. It means buyer choice is improving. And when buyer choice improves, broker quality matters more because a weak advisor can push you into the wrong asset much faster than the market can save you. That is why I think the broker shakeup is actually healthy. During the boom phase, too many inexperienced brokers and small firms entered the market chasing fast commissions. In a rapidly rising market, broad momentum can hide weak advice for a while. But in a more selective market with more completions, more comparisons, and more serious scrutiny, bad advice becomes expensive much faster. This is where Dubai Property Law 2026 really matters. Stronger rules are valuable because they help reduce information gaps, improve standards, and push more business toward professionals who understand title structure, developer track record, service charges, rental depth, exit liquidity, and the difference between a good launch and a good investment. In other words, better regulation does not kill opportunity. It filters opportunity. It makes the market better for disciplined buyers and worse for people relying on hype. So, who benefits most from this phase? First, overseas investors. If you are buying from the UK, Europe, India, Africa, or anywhere outside the UAE, you are depending heavily on the people guiding you. The wrong broker can make a normal purchase feel safe right until the valuation, the handover, or the resale proves otherwise. Second, end users upgrading in 2026 can benefit because more handovers mean more finished stock to compare. In practical terms, that can create better selection in stronger communities and better negotiating room if you stay patient. Third, yield-focused investors can benefit because the market is giving clearer separation between real income assets and marketing-heavy inventory. A more professional brokerage environment makes that separation easier to see if you are working with people who actually underwrite deals instead of just selling them. But there are still real risks, and this is where smart buyers need discipline. If a broker cannot clearly explain developer track record, service charge burden, realistic rental comps, supply pressure in the exact cluster, or your likely resale depth, that is a red flag. If the conversation is all launch urgency and no downside analysis, that is another red flag. And if a deal only works under a perfect case scenario, it is probably not strong enough. My view is that 2026 is still a live opportunity window, but it is not the same kind of easy money environment people got used to. The better market for serious buyers today is not about chasing the loudest launch. It is about choosing stronger developers, better located stock, cleaner payment structures, and advisors who can still defend the deal if prices normalize and supply keeps arriving. That is why I would focus on a few filters right now. Work with compliant and informed brokers. Prefer assets that still make sense on rent, livability, and exit depth. Compare completed and near-completion stock carefully. Stress test your numbers before you fall in love with the brochure. And remember that in a more regulated market, professionalism itself becomes part of the investment edge. The bottom line is simple. Dubai Property Law 2026 and the broker shakeup do not tell me to run from the market. They tell me the market is maturing. And when a market matures while demand still holds, disciplined buyers usually get a better decision environment than the hype cycle ever gave them. If you want Astra Terra Properties to help you compare real Dubai opportunities with sharper due diligence and investor logic, visit astraterra.ae or message us on WhatsApp today. And for your next watch, go to our market update, our off-plan payment plan guide, or our golden visa investor breakdown.